Hello, my name's Peter, and today I'm going to talk about stock. Stock is a part of the ownership of a company that people buy as an investment. And the word stock is in the 17th place in the Google trend list, and it has been one of the most popular searches over the last 24 hours on February 27th. And it just has reached its peak now in February, and since 2012, it has been steadily growing as a trend. And even though it's trending in the last 24 hours, there's much bigger idea here that I want to talk about. We can see a steady increase in the trend since 2012, and I believe it is because it is just advertised everywhere. People are advised to buy stocks. Every retirement fund, such as 401k, which is actually even matching what you put in, all of them are buying stocks. And most of Americans are actually owners of big companies such as Walmart or Apple. So just because they buy those stocks, they are owners of these companies. And some people think it is a good thing, and some people think it's a bad thing. But no matter if it's good or bad, it's honestly only place where Americans really can be putting their money in, and there is not really a good alternative to stock market. So nowadays, many websites, magazines, TV shows, you name it, everything advertises stocks. People are taught to put money in stocks and hold it for long term. And yes, long term, it would probably make you pretty good money. But what is happening now though? People are borrowing money to buy stocks. And I mean, how wouldn't you want to buy those stocks if everyone's telling you to do it? And when you look at the returns of the last 10 years, since 2008, it has gone up so much. And that's not even it. Because of compounding interest, that money would be even much more bigger. And after those 37% lost on 2008, it has gone up so much. And there's it's no wonder that many people just want to put their money in even now when the stock market is so much gone up. There is pretty much nothing that Warren Buffett would tell a person to allow to get in their way of buying stocks. But if you have to borrow money to buy stocks, Buffett really advises you not to do it. In fact, he said it is crazy, in my view, to borrow money on securities. So if you borrow money, it means you pay interest on it. And in order to make money, you have to beat those interest rates in stock market. It is a very scary bet. And in case of a crisis, people could end up losing a lot more than they actually even own. And it's just very important to remember, never use money that you are not afraid to lose.
The average person who doesn't have your investment skills and they want to not lose their money, would you recommend that they play the stock market, they buy mutual funds? What do you recommend to the average investor?
Well, playing the stock market, no, playing is not a word I would choose. I would recommend that they put a similar sum, and maybe they'd be earning more as they went along, but save something every month and basically put it in an index fund.
Right.
They are not in a position to make judgments on stocks themselves. They're not in the game any more than
Right.
I can prescribe in medicine or something of the sort. They will get a good result. The American economy has done wonderfully. I mean, if you take the 20th century, the Dow started at 66 and it ended at 11,400.
Right.
Now think of that. How could anybody get a bad result in investing starting at 66 and 11,400? But a lot of people do because they jump in at the wrong time or they think they know this stock versus that stock. But the average person should just consistently buy equities, which to me are by far the most attractive investment choice around, and put it in, and if they do that for 20 or 30 years, they'll do very well.
But you don't subscribe to the efficient market theory that says that basically you can't beat the stock market? You subscribe to that theory that you can't, or you?
Well, if I'd subscribe to that theory,
right.
I'd still be delivering papers.
Right.
Yeah.
Right.
No, I don't think there's any question that certain people who evaluate stocks as businesses can make intelligent decisions about businesses, which will enable them to do very well in the securities market. But I don't think somebody that is listening, to a TV channel tell them what to do, or somebody jumping around with histrionics, or even some salesperson who's getting paid more money for selling them something and getting them to change tomorrow is the key to it.
So some people might ask, so what? So what it is trending? So what people are borrowing money and investing it? It's their choice. But in reality, this peak that is happening right now, and the fact that the word stock is trending so high, is very dangerous. Stock market's volatility becomes a lot higher, which means on a daily basis people can lose and make much more money than normally. There's a lot more people involved right now. But the reality is that markets should have a steady growth. And if it becomes so popular, then the same thing that happened in the late 90s and early 2000s could happen, the dot-com bubble. Something very, very similar could happen. Even the taxi drivers would have asked what stocks you were buying and what stocks you're investing your money in, what is the future. Everyone wanted to know that, and everyone was buying stocks in technology-based companies, and in that way they were overpricing them and creating that so-called bubble. And when an event happens that could trigger a loss in stock price, all this money that is called dumb money disappears. And those people who had borrowed money are too afraid to lose more, and they have to cut their losses and sell their stocks, which makes the price drop even further more down and leading to a huge economical loss for so many people. There is also, of course, something called that is smart money. And it's the people who understand this process and are capable on buying low. When everyone else instinct is telling them to sell, they're buying. Those people are the ones that benefit from all of this. But in fact, majority in this case loses. So right now, it just seems like people are getting drawn into this even if they don't know what they're doing, or even if they don't want it. It looks like people are too easily manipulated, and there aren't really other alternatives to this. I believe this has a huge impact on society just because it can create huge problems in United States economy and even economy in other countries. And right now, everyone is listening to the news and to the advices that they should buy stocks. And no, don't get me wrong, I am not against it. Even if it sounds a little like I am, I'm actually for the idea that people should buy stocks. But I believe it is getting a little out of hand right now. If we were able to achieve steady growth and people would risk money that they can lose, everything would be good. But because some people want to make tons of money in short period of time, all of us might have to suffer because of that. Because as we know in the saying, what goes up must come down. And in many cases, what goes up too fast is going to come down even faster.